Hi everybody, this is the introduction to Ed's order flow tool, a little study I wrote. Started this thing about, we're talking a year and a half, maybe 2 years ago. I didn't like the prices on a lot of the order flow tools, and so I decided to write my own, and turns out I'm offering to the community for nothing. The expiration date on this thing, by the way, on the current one, which is 04G, is at the end of the year. And the reason why I've got it set up as an expiration date is that I want to be able to push out one before that has bug fixes or any features, and people will get the bug fixes and features. So I don't have to have somebody coming back, a year and a half, 2 years down the road going, oh, by the way, I found a bug in your thing. Okay, what version is that? Oh, gee, that's a 2-year-old version. So let's take a look at it. Once you download it, and I'll put the link to the download in the video in the comments, in the description of the video. Once you download it, you'll go over to your chart studies, and all I've got on here is like just a current price line and a volume. Okay, right now I've got it set up for right before the 9:30 open. Let's get this out of the way. Okay, so right before the 9:30 open, you can see it sold off. Sold off up here, about 8 o'clock in the morning. You can see it selling here. So, and these are just like 1-minute candles. So what you do, you go into your chart studies. You go down here, you say add custom study, and it will pop up, and you'll see high volume at price, which is what it's called, high VAP, which is what it originally started off at. All I wanted to do was to expose the volume point of control in each candle, and then map that out to see whether the market was going up or down. And the order flow just kind of evolved from that over the past couple of years. So I want to add it to the chart, okay, and then click OK. And it's very, very fast. Now it's mapped out a bunch of different stuff. You'll see high volume price. You'll see all the stuff, this stuff over here. You'll also see the indicators over here. You'll see buying imbalances, selling imbalances, which is SIMB, either T or B, either at the top or the bottom of the candle. You'll see a selling imbalance, or you see a selling imbalance at the bottom of the candle. You'll see unfinished business. You'll see VPOC of the candle. You'll see it calculates a VPOC for you, and you'll see either green or red areas at the top or the bottom of the candle, which is reducing volume. So you've got a lot of the very basic order flow stuff here, which people will charge you, hundreds of dollars or sometimes even thousands of dollars to see this information on a chart. Okay, so all these things are labeled. You see I got a selling imbalance here, and I don't have another selling imbalance. You'll see that. I don't have another selling imbalance. Once I get another selling imbalance right there, that thing will go away and highlight with the new selling imbalance, which is, got one there. There we go. See, as we went to the next candle, it disappeared and showed up there. So that's the next selling imbalance. So we have a selling imbalance here. The next one showed up there. Okay, so how do you use this guy? All right, what we're doing is we're looking at the tops. We're concentrating on the tops and bottoms of each candle to see whether we've got order flow, any order flow up here that would say we're going to reverse. Let me go into chart settings, chart candlestick bars hollow. Let me change that so you can see a little bit better. Okay, so I know this is there's a lot of information in these things, but what you're looking for is you're not necessarily looking for stuff except patterns. Okay, for example, you've got buying, and all of a sudden you got selling. Okay, where that's turned around. Well, a cool thing to do, and I've seen this done in CR charts, the numbers bars will show you that, but this is, I didn't want to be able to rely on a level 5 feed. I didn't want to rely on numbers bars. I didn't want to rely on any of that stuff. I just wanted to see just basic order flow stuff within the candle without having to rely on that extra information that some people, don't pay for, or, either don't or can't pay for, okay? So we're looking at candles here. We're looking at bars here. Let me go into the chart study, which is kind of a cool thing to do. Here's VPOC. Okay, if I change that from a dash to a line, which is kind of cool, I'm going to do that. If I change the dash to a line, you can see where basically you've got, here's all my volume point of control. Here's my point of controls. Here's, it goes up, goes down, goes up, goes down, goes up, and then you have this little sustained up move. Well, now you got a flat spot right there where all your volume is right there in that candle, okay? There's all that volume. You see spots where you've got your VWAP price. If you like to look at VWAP, you can look at you can do the exact same thing with VWAP. That's almost down at the bottom there. That is, I can change that to a line. And that shows you, here's my VWAP. So I've got VPOC up here. I got VWAP. There's an obvious change in sentiment, change of behavior, change of change of trend. Well, how'd you know that? Well, you can look at that VWAP going up, and you can smooth that if you want to. If you want to put it on a 1 or 2 period smoothing average and make that a little bit smoother, you could basically show that where where that changes. Here's a very short-term change. Here's a selling imbalance at the bottom of a candle, which that bottomed out. Significant buying and selling imbalances are significant if you see them at the bottom of the tops of a candle. Now, sometimes you'll see a buying imbalance at the bottom of a candle. Well, you'll see there's a lot of volume coming out there, but it's getting absorbed. So what happens? That usually, you usually see the market turn around. Selling imbalances. I'm sorry, that was selling imbalances at the bottom of a candle, buying imbalances at the top of a candle. Sorry about that. So what you're looking for, you're looking at, there's a selling imbalance there. There's a selling imbalance there. You're looking at that at the bottom of a candle. Most of the time, you could get in with like 2, 3, 4, 5 tick stops and have winning trades. And you can go in. I will go in for 8 or 9 ticks. So you're looking at $100. I'll just scalp $100 and go on my merry way. Say for example, if I get a selling imbalance here, if I took that at the bottom and here's reducing volume to the upside, okay. So there's buying here, and if you go in there with the numbers bar, you'll be able to see that. But see, I don't need them. I don't need numbers bars. I know exactly. The shaded area says, hey, we're going up. We had reducing volume coming down. Now we're going back up. So I could take it at the top of that guy with I put my stop down here. Down here at what 1, 2, 3 ticks. I got a great entry right there. I could take it there. I could take it there. I could take it there at the top. What happened? Come back down right there. You got another selling imbalance. Well, what happened? Boom. Market went back up. Okay. So somebody's driving that market up. So that's good for, you're good for, say for example, if you had a limit order there, you're going 1, 2, 3. 4, 5, 6, 7 ticks. If you want to hang on to that trade, 7, 8 ticks there. Here's another entry point if you got out. There's an entry point there. That was probably a stop run right there. See where all those bars are? That's what I look for. I look for bars like that because that's where I want to get my entry, because there's a lot of absorption down here. There's a bunch of selling imbalances. Somebody's buying basically everything that they're selling there at 43.58. What do? They buy it. There it goes. Boom. And it takes off to the upside. You can sit there and play those back and forth if you want to. I'm not going to play that back and forth on 1 minute bars. I like to go with the trend if I'm going to trade 1 minute bars. If I'm going to trade anything other than that, you know, larger bars, I'll sit there and trade back and forth and back and forth. If I get a buying or selling imbalance at the top, a VPOC at the top of a bar, VPOC at the bottom of a bar, buying and selling imbalances at the extremes, the bottom and top or top of the bar. That's what you want to look for. That's definitely what you're looking for. There is a reducing volume right there. There's a good place to reverse your trade. There's your VPOC right there at 43.50.75. What happened? Market comes back up, tries to push two ticks up there, came right back down. They were fighting it out right there. There was your VPOC for 1, 2, 3, 4. You know what? 4 or 5 candles right there. So you've got all this stuff right here, and there we go, selling off. There's a nice sell-off right there. So you could get in anywhere in this area, and you got at 43.60.75, and you got what, 2 tick back pressure on that thing, and then it ticks off to the downside. Boom, there we go. There's a flat spot there. You could take off your trade right there and wait for another setup if you wanted to. That one was to the downside, or if you wanted to, you saw that and you go, hey, I want to re-enter that because I don't think it's going to go anywhere. It's basically going 1 tick back and forth. Well, that was at 7 o'clock in the morning, so yeah, whatever. That's not too far-fetched. You know, from 7:05 to 7:10, you got a 5-minute period there where they're just going back and forth and back and forth and back and forth and just balancing right there. And then they decide to go back to the downside, came back up. Probably, we're looking at a pullback here. We had a selling imbalance here, or sorry, a buying imbalance right there. Drove market back up a little bit. You've got some unfinished business down here, which usually unfinished business, not always, but usually unfinished business flags will say, look, we're going to come back down. So this was a pullback, an obvious pullback, and then down we go. And you can see that was a really, really, really nice sell-off. Now we've got 2 unfinished balances right there. We've got VPOC right across there, unfinished balance right, unfinished business right there. And here we go. There's your VPOC. They try to push it down, try to push it down, try to push it down. They're going up and down. It's just very balancing right there, and then they reverse the market. So you could literally have trades one tick farther down here to pick it up for the short side, 1 tick up here to pick it up for the long side, just in case. And here we go. You've got some ticks there, pull back, some ticks there. There's your where your trend change was. It pulled. There's your VPOC and your VWAP came up here, back down, back up, but it didn't come back up to that. Didn't back up to that higher point right there at 43.57. So you'd be looking for a short anywhere up in here, and then what happened? You got a nice little short down there. So you're looking at maybe 9 ticks. I like to use the 250 volume chart, to tell you the truth. You can see signals all over this chart. I like to use the 250 delta volume chart. It sometimes shows things a little bit better. And I'll show you that one. Where's my delta volume? 250 delta volume. Here we go. And you'll see on 250 delta volume on pre-market, you'll see cool things on the pre-market. You'll see, say for example, let's go down here. You don't have as much chop and as much junk going on pre-market, and you can see the trend. There's the trend change right there, and you can see that trend was very, very clear. And the trend change was pretty clear. You've got all these, reducing volumes. See those red areas? The red area is reducing volume. The greens are all moving up. the reds are all moving up also. So what you're looking at is you're still in trend, still in trend, still in trend, still in trend, right up in here. And then you can follow that. You can follow that with, for example, if you want to put your stop loss one tick, say for example, one tick below that, and just walk it up one tick below that, say right there. And then once that thing came out, that was a nice bar there. You could get out there, or you could get out there. There is, I've got another video that talks about that. Okay, and you can see how there was VWAP right there. VWAP was almost at the top of that bar. VWAP is 360.50. You can see where VWAP was coming up, and VPOC, actually VPOC and VWAP were at the same place. And then all of a sudden, bam, it starts shifting down. So once you cross back down below that, you could get into the short. You could reverse your trade, or you could just get out of that long trade. Or if you're scalping it, X number of ticks, you'd probably be out by then. And then reverse your trade and then go get in the short trade. Anyway, this is just a very kind of a brief introduction. Let me show you what's currently going on. Here's what's currently going on with the S&P. Okay, I can show you. I want to show you the limit order book. Here's the limit order book. These are the maximum bid and ask, right there and right there, where you say, well, gee, what's up? What's that? That's certainly larger than that guy. Okay, well, the reason why is because we got locked into levels of market depth analysis is 21. Here's your imbalance ratio. You can change your imbalance ratio right there. Minimum size for bar, I usually leave it at 5. That's so that I can have reducing volume. If I set it any lower than that, my reducing volume usually just disappears and goes away. So you can set minimum compare levels at the bar extreme. Those are set for 3. That's your traditional 3 levels to compare reducing volume, which usually means you're looking at stuff getting either absorbed or exhausted, but you're looking at the just reducing interest, but it keeps getting pushed up, and then all of a sudden it'll tip over. So minimum compare levels at bar extreme, you can move that. Traditionally, like I said, it's 3. You can change it to 2, you can change it to 5, you can change it to 10, you can change it whatever you want to do. Limit to levels of market depth analysis. I've learned from experience that the algos will only look at 20 or 21 ticks on the S&P. And you'll see that as price will basically go back and forth here. As price will go back and forth here, you'll see limit orders basically turn on and off up here. I don't have that turned on right now. Market depth historical graph for now let me do this. I've got one up here. Where is there it is. Night market depth historical graph. Okay, so this is during the day. It's almost unreadable. Here's during the nighttime. You can see where they've got all those big resting orders up here. Okay. So you see them coming up here. They disappear. They disappear here. But you don't really need to see that. You can just look and find out where all these things are. Let me hide that. So you can see here's the limit order book. That's within 21 ticks. Now, if you wanted to move that out, okay, you can do some really cool stuff with this. There is within 21 ticks. That's what the algos are going to react to. If you want to see where all these orders are, like where in the heck are all the big orders? The biggest number of orders are right there. Okay. I'm going to be looking at that level, at that 43.80 level, as between 43.79 and 43.80 as a top of the market, until we go down. Now, the market's dynamic, so what you're looking for, or what you're looking at, here's your maximum down here. There's not a whole lot of orders down here, but these guys are moving up, which means they're trying They're trying to pull the market up to go for that liquidity right there. That was just a little bitty pullback. If I replayed the chart, you would probably see where that shifted down and then shifted back up. And it's starting to shift back up, which means they're, and you can see it, they're starting to pull price back up, and they're looking for all that liquidity up there. They'll either build on that liquidity, which is what, 466 orders, resting orders up here. What will usually happen is that they'll do one of two things once price gets up there. Once price gets up there to between 4, 6, 8 ticks, what will happen is they'll either pull a lot of those orders, which means they're getting them out of the way and they're going to go higher, and this will show that. This will show the next level up. Say, for example, if they start adding orders up here, you'll see that shift, and you can see it shift here, but you'll see that shift up, which means they're getting all those orders out of the way, and then they're going to pull the price right back up there, and vice versa to the downside. Let's go to the chart study. Oops. Go to the chart study and go to high volume price and change that. Say, for example, you got 100 levels up and down. Now all of a sudden, boom, see what it did? Came right back up to that 466. So you don't necessarily have to pay a whole lot of attention to all the stuff down here if you don't want to. If you don't want to play the stuff back and forth, you just say, hey, where's my levels for the day? Okay, 43.80 plus or minus 4 ticks, unless they move us out of the way. Where's the bottom of the market? 43.56, right there. So you've got a lot of room to play with, a lot of stuff to the upside. So you can set this back down and then sit there and work with it and watch it as price goes up and down and up and down. See where they now see where on this bar, this 250 volume chart is I really like it. See, for example, here's that buying imbalance, and then you had that reducing volume right there to the downside. What happened? They came down here, rejected off there, and bought it back up, and that was a fairly clear signal, and that was worth a few ticks. So if you watch this for a while, I don't necessarily have to go through everything, but if you watch it for a while, you'll see what's going on. You'll see how these buying and selling imbalances and VPOCs and VWAPs at the top and the bottom at bar extremes will help you get into some really good trades and some very profitable trades at a very small risk. Anyway, that's it. I'll probably put out more videos on this later on. I will be posting the link to this so anybody can download this if they want to. They want to play with it, do whatever they want to. The next video, I'll probably go into some of these statistics like ask volume percent, bid volume percent, our pretty per tick and percent, that sort of thing. So that will help you if you want to feed this to another study, if you're looking for statistics to map out, if you're looking at all that. This basically exposes all this information over here. Delta volume, limit order book delta volume. You've got a delta volume. Where'd my delta volume go? It's in here somewhere. There's delta volume of 86. I've got a positive delta volume. I had a negative delta volume. When those things are both positive, we're going to go up. If those things are both negative, we're going to go down. If those things, one is positive, one is negative, or they're small, close to each other, then we're going to kind of chop around for a while. So anyway, I will get into that with another video. All these numbers here, you've got all this cool stuff here, all kinds of really interesting information that you can look at that will help you in your trading. So have a wonderful evening. I'm going to try to get this thing posted this evening so that people can use it right away. All right, thanks guys.